Okay, welcome to today's free trading video and market analysis for the MiniAnalyst.com. I'm Kenny, your host, Senior Research Analyst with the firm. It's been a choppy week. I can tell you one, two, three, four, starting with the amazing Turnaround Tuesday, kind of a term we've coined around here, the TAT, Turnaround Tuesday. That was market and impressive. It was an outside day reversal to close well below the low of the prior day. And the recent swing low, but I'm getting ahead of myself. Let's go ahead and look here at the chart of the intraday dynamics. Where are we today? Well, the first thing we notice is bearish right here in our primary indicator. Secondary indicator is bullish, so hence the choppiness that we're getting. Obviously, it doesn't look like these unanimous days that we get here that signify at least a bearish day. And of course, even back here, again unanimous, and fall through there. And of course the bears fall through here from this unanimous, a little choppy that day, but this was obviously signifying lower price movement forthcoming. So what happens? Well, we get just choppiness. It was a down day earlier in the early session yesterday. That was Thursday, and then it turned strong late in the day. So very choppy day. We were fortunately, I believe, long for this move, although look at these swings. This is just crazy. The best place to be in here from a discretionary standpoint is nowhere in terms of the intraday, because you're just getting some very wild and violent swings. Obviously bearish, bearish, bearish here. You did get the fall through, the break below lower, but look at this move here. This probably was news related, and got this fall through here, but again choppy here today, and breaking below the early session lows. Bearish, bullish, bearish, bullish. No good place to be on the intraday. So where are we on the daily? We'll go ahead and switch over and look at that. And we see that, pull that up, the chart of the S&P 500 there, cash market. And we always like to leave our levels in because players definitely like to trade off levels more than once. And this happens to be this was our initial target, which we didn't make. Now, of course, anytime, this is kind of a trader's rule, unwritten rule, anytime you come down and you don't actually hit the mark and you bounce, you're going to hit the mark and you're going to go further than you would have had you hit the mark. I'm not saying that this is totally applicable here, but it certainly bears noticing that when we went short from 1520 with our first target here, second target here, third target here, we didn't quite reach it. So we got stopped on our third portion of our position. Got stopped back here above this high, this low day, this outside bar reversal. And of course, reversing that, obviously we're not going to go into that, but we've called most of these moves, and in addition to being bearish here for this move, and that's where we are still today. We did call a discretionary move on some strength here that we didn't expect. We had to stop, I believe, below the midpoint of whatever day that was, and we obviously got stopped right around here on that position, and are still bearish. So we did get some fall through there, but again, just been very choppy this week, as you can see by this enormous outside bar reversal to close at a new low, but a bounce back in a short-term trend, and now we're just consolidating. Did get the one errant close below this target. So where we go from here, obviously we have to give the edge to the bearish, to the bears, because we are 20%, 50%, and 30% bearish for a 100% full throttle bearish bias there from a trend following perspective, fully bearish. From a horizontal price technical perspective, we are bearish below this swing point. So whatever low that is right there, that is 0610. We're at 0268, so technical we're bearish from a price technical perspective, horizontal in nature as well. Bearish in terms of momentum, both short term and intermediate term. So a lot of bearishness going around here, folks. And where was the low? 1378.70. So as we said many times in the past, the market loves the 40 and 80 levels, the S&P market I'm referencing, and no surprise that we would get down to 1380 and bounce. Here we are at the psychologically significant and very round 1400 level, and that's kind of where we're holding. So that's why we're getting this these choppy moves. But where are we headed? Obviously, we must anticipate further moves lower. So that's where we are, making pretty good time today. Where have our portfolios been? A little bit choppy this week. We've taken some haircuts. I think we're down probably an average of 15% on most of our portfolios for the week. It's been a very choppy week. We were positioned wrongly on Tuesday, what we would call a terrible Tuesday. Made some money back, I think, in a few of our portfolios, but it's overall been mixed and choppy. Definitely a good time to be starting. Because you want any kind of a pullback retracement, such as the one we've had this week, to be behind you rather than before you. So, um, we actually did. A lot of our clients are setting up from the huge amount of business that we've gotten lately, and this has forced us to close a few of our portfolios, as we may have mentioned in the past. But did want to tell you guys that at least for now, we'll go ahead and switch over to that. So that's where we are in the market, totally bearish. And at least for now, we've got a bit of a band-aid, I guess you could say. At least for now, we're going to be in some development of some new day traders. Just our day traders are just in such high demand. The Swinger DT is still open. All the Delta 50s and above, Delta 50, Delta 5, Delta 20, the Matte Black, of course, all these portfolios are open. Of course, the options and the Forex are still open. A lot of our smaller day traders, the Delta DTS, the MAP DT. The big thing is the MAP DT version 2.0 and the dual day trader. Those have been closed. You can still get into a very similar portfolio. We'll go ahead and look at that right now. If you go to the Platinum Day Traders, and the first thing you notice is the MapDT version 2.0 is currently closed to new members. However, we have the MapDT 3.0. Now, the version 3.0, we had this actually replaced the MapDT, the version 2.0. It was just an improved model. The MapDT version 3.0 is not replacing the MapDT version 2.0. It's just a slightly altered version. So where were we on the MapDT version 2.0? We do have our numbers in. We haven't updated them on the website yet, but we do have the numbers for December, but these are November numbers. 570% going back 13 months return against a max drawdown of 43.5%, which occurred on this little guy right here, which was in last August, but obviously you can see the average drawdown is considerably less. So 570 and 43% max drawdown. Well, here's the MapDT version 3.0. And this is more heavily focused in trading the ES, which is a much more liquid market. We can handle at least probably 600-700 contracts there, so no problems with the ES. So that's why this portfolio has been focused on other systems that aren't quite so heavily loaded, and systems that can take a lot more load. So what have we got? Well, we've actually got a slightly better portfolio than the version 2.0. It's a little more concentrated, particularly here in the grind, than we generally like to see, but it's certainly not a problem for us to promote this. And this is the MapDT version 3.0. As you can see, a 594% return against a 42% drawdown. So a little higher on the return and a little less on the drawdown. So this is actually a $22,000 portfolio. There is going to be a DTS. If you go to this, a $10,000 version right here, we can look at. And it's slightly different. But again, a $10,000 portfolio, 587% return, 36%. We can actually double this portfolio if you guys would rather have a similar return to this than the 42% and the 590. Really just oranges and oranges there. But if you guys are interested in those portfolios, write to admin at MiniAnalyst.com or any of our other portfolios. Like we said, we had a pretty nice haircut on Tuesday. So if you have been wanting to start, particularly Swinger DT, a lot of you guys are interested in Swinger DT. Of course, it's one of our favorite portfolios. You definitely want to draw down like Tuesday's drawdown behind you, and it is behind you. So now's a great time to start, and we'd love to have you in any of our portfolios. Hope you guys are having a great trading week and having a great weekend. Well, actually, I forgot I wanted to show you guys the Delta DT, which I believe is still open for you guys. And a couple of beautiful trades here today. The portfolio is up about $1,500 today. And this is our Delta DT. But just look at these beautiful trades. We had our Mini Dow Day Trader 1.0 up $900 for a 2-lot. And up $1,200 for our Day Trader 5.0, up for a 3 lot, and the day trader 6.0 for the mini Dow. So we had all these short exposures, covered one, still short, got a nice little bounce back. I'd say nice, I'm being facetious, of course, being that we're still short, but just very nice performance. This portfolio I think is about flat for the week.